All right, joining us now, talk about inflation, Art Laffer, former Reagan economist, Steve Moore, host of More Money, WABC Radio. How about that? Going to run some charts in rapid fire. First one's commodities, CRB index, pretty flat, hadn't really moved all year. This is all year to date. Pretty flat, as you can see on the screen. Second one's the so-called break-evens, 10-year Treasury adjusted for the CPI. That one's zigged and zagged, but basically it's about the same today as it was at the beginning of the year. And last one's gold, which does show a rise, although it's flattened out lately. I think that's more of an uncertainty premium than it is an inflation premium. Steve Moore, I'd say it's pretty calm inflation report. This is from Unleash Prosperity. Yeah, I don't see much going on.
Yeah. Look, I've been wrong. I thought these tariffs would cause higher inflation. Tariffs are taxes, and consumers bear some of the costs of that, but it just isn't showing up in the numbers right now. It just really isn't. And if you look at, almost any measure of inflation right now, it's pretty tame. I mean, somewhere in the 2.5% to 3% range, which is a little bit higher than we want, but hardly a catastrophe. And I want to make one other quick point. There was that slight increase in the 30-year bond interest rate. And, oh, my God, the world's coming to an end. But that rate isn't really up much, and neither is the 10-year. So the point that I think a lot of people miss, it's not deficits that ruin the economy. It's government spending. So bring the spending down.
Yes. No, just a good point. I would also say, by the way, for what it's worth, our friend Scott Granis writing, the money supply, M2, both the supply and demand of money seems to be about equal. I mean, Arthur, for all the, gnashing of teeth and so forth, this 12-month CPI through April was 2.3%. Looks like it's been headed lower for several months. I don't see any big inflation, Art. What do you make of it?
Well, let me, if I can just say that tariffs and the threats of tariffs, the problem with them is not to raise prices. Obviously import prices with tariffs will go up. But if you know Lerner's symmetry theorem, people export goods to buy imports, and therefore export prices will fall because we won't be selling them. And on balance, tariffs should not raise inflation. They should not. And if you look at the history, the Smoot-Hawley tariff or the Nixon situation or any of the others under Kennedy or under Clinton, when Reagan and Clinton, when they did the other direction, there was no price effect. If anything, prices fell after the tariffs. That's not what the problem with tariffs is. What it does to the economy, what it does to the real economy. That's where the fear is, and that's where we should focus.
Tariffs are deflationary and recessionary if they're not offset.
That's correct.
If you ran, I do not believe this is what President Trump is going for. He wants to level the playing field, and he wants to stop a lot of the unfairness in the trading system. But if you go back and look at Smoot-Hawley and some other situations, tariffs were really more recessionary than anything else, Steve Moore.
That's correct. Exactly right. Oops, sorry.
That's right. Arthur Laffer taught me that. By the way, I like, Larry, your idea that you talked with the senator about, which makes a lot of sense. If Donald Trump is going to do a 10% across-the-board tariff, and we could argue about whether that's a good policy or not, but let's say he does that, you're talking about $2 or $3 trillion of revenues, and that would offset. We could cut the corporate tax rate to 15%. We could index the capital gains tax. We could do all those things. None of that revenue is in the model right now. None of it.
No, it can't be. CBO can't score it because Congress didn't do it.
I know the dumb rules.
But if you look at Joe Livornia, for example, or Dan Clifton, who've been tracking this, you're on a run rate just using the 10% minimum, the basic tariff rate, 10% across the board, which I think is going to be around for several more years. So that's on a run rate of about $200 billion. Over 10 years, Arthur, I give that $2 trillion. That offsets a lot. Now, the question is that we want. I mean, the question is that too contractionary, or maybe it doesn't matter? I don't know. I think it matters if we get what I think President Trump wants, which is a freer trading system with lower trade barriers, I still believe that's where his head and heart are. Open up market access and let's have a fair trading system instead of the lopsided, one-sided, taking advantage of the U.S. I mean, that's really what he wants, isn't it, Arthur?
It's exactly what he wants, and he's been saying it all along, so it is exactly right. I would beg you, though, be very careful of trying to find more revenue sources by taxes. I mean, I don't mind revenue sources by dropping spending. We're way overspending. But, you know, when you find these revenue sources, these yahoos in Congress, if they get more money, Larry, they'll spend more. They won't lower taxes elsewhere. They really won't. And that's especially true of Republicans. Republicans talk a great game, but, you know, when it comes to push and shove, these guys, Democrats especially, but Republicans alike, they all want to just spend every dollar they have. Put the tightness on the system.
True.
I would not put across the board 10% tariff. If he does that, make sure it's tied, legally tied, to dropping the income tax by at least as that much, if not more, especially on the highest brackets. We should go back down to the Reagan 28. If Trump wants to be as good or better than Reagan, he's got to get that highest rate down to below 28%. If Reagan can do it, can Trump do it? I think he can, but boy, he needs to start trying right now. Bring that highest rate down.
The best way, I gotta get out. The best way to raise revenues is to reduce marginal tax rates. Lower tax rates equal higher revenues.
There's a great book about that. There's a great book about that called The JFK and the Reagan Revolution.
Okay. Art Laffer and Steve Moore, thank you, gentlemen.